keep saying decades and decades. I mean, how old are you? You look very young.
Much older than I am.
When we were starting, we decided to focus on businesses because we felt businesses who understand some of these things. It's easy to control business narrative than retail market narrative. But increasingly, we realized that you ask certain businesses for certain documentation as a way of onboarding, and they don't understand why they have to provide those information. If you ask a business to provide bank statements as a way of showing source of funds, and they're like, you want to go and look at my money? Like, I don't care about looking at your money. I want to establish that the money is from a genuine source.
That's the thing, right? What I found to be even more appalling is financial literacy is even as, frankly, just about as poor, even among not just educated people, but among financial sector employees.
You kidding me?
But ask yourself, when there was a last scam, right? Ben's Gold.
Yeah.
Does anyone not know
That is very true.
guys who were from the sector? And they were very convinced it was legitimate. So financial literacy is broad, right? Financial literacy is broad, and I think being able to balance a checkbook is only one part of it. Is being able to understand how to manage your credit properly, there are several elements of it.
In every industry, there's going to be bad actors. I always say this, not really taking things for what it is and not the industry that person is playing in. If I come here and say, I'm doing cocoa trading, and if you give me money, I'll double it every month for you. And at the end of the day, it ends up to be a Ponzi scheme.
Yeah.
It's not the cocoa trading. I was doing a Ponzi. So let's treat Ponzi as Ponzi and going after people.
Hey, welcome once again to the Africa Discourse Pod. At the bylines or the sidelines of Digital Asset Summit Africa, we're engaging the movers and the shakers of the industry, talking to them about the perspective and not only just the perspective, looking at also what's happening within the digital assets ecosystem. Again, joining me now for a quick conversation around CBDCs, stablecoins, and the future of payment is Mr. Kwame Oppong and Ebenezer Ghanney. I got the name right?
Yeah.
Hopefully. Mr. Kwame Oppong, I got your name right. Thank you very much. And together we're going to unpack the future of payment and the infrastructure that would unlock it. As you all know, the African payment rails are evolving, and from mobile money to stable coins, and now we are seeing central banks developing digital currencies. The question would be, what are the design choices on these currencies? Why are central banks actually developing digital currencies? What is the future of digital payment, and how do we build corridors that would serve remittances to underserved? Thank you very much for joining us. I'm just going to begin with you quickly. I listened to your conversation, right, and I must say quite insightful work you have done with the Bank of Ghana regulating the space so far. Generally, could you maybe help us understand what CBDCs are and what stablecoins are, and why is it a big deal?
Okay. No, thank you. CBDCs are basically a dematerialized version of a sovereign currency.
Okay.
That means
sorry, let me break you shortly. Could you explain for a 10-year-old?
No, I'm going to break it down.
Okay, thank you.
When I say dematerialized version, in every jurisdiction, an institution, maybe a monetary authority or a central bank, is mandated to provide currency. Now, that currency, over the last thousands of years, has been either in the form of a coin or a note. So a CBDC is really just a paperless, non-physical form of that particular currency that is made available by that state-mandated institution to be provided to the public as they will notes and coins. So you can think of it as notes, coins, and a digital version of the first two.
Interesting.
That's really what it is.
Okay, so it's basically the monies we use now for our mothers in the house and our fathers. The monies we use now, a digital version of it.
Digital version.
And how are they accessible?
So CBDCs are generally accessible because they are digital. They're accessible either on your phone. You can have them in accounts. You could have them. They're like a file, right? So you can have them on your devices, your smart devices.
Yeah.
They can be anywhere. But the important distinction is that they are public money.
Okay.
And it's from a state-mandated institution. So unlike some of the stable coins, cryptocurrencies, and the rest, even when they're being used, many instruments can be used as a medium of exchange, but they are not currency. So that's that important distinction. And that's actually why there is some complementarity between CBDCs and stablecoins. But often because of the nature of it, people assume it has to be in some kind of a wallet or account or something. No, think of it as digital version of cash. That's it.
Okay.
Digital version of cash.
So CBDCs and stablecoins are basically digital versions of cash.
No, CBDC is a digital version of cash.
Okay.
Stablecoin is a different. Stablecoins are basically a token, a tokenized representation of an asset or value, right? So maybe a currency somewhere, but it's not inherently that. So a stablecoin has to be backed by either a basket of assets or an asset or currency. But CBDC is. So for instance, if you take 5 cedi note CBDC, it doesn't need to be backed by gold, any other asset or any other currency.
It is backed by itself.
It is fiat.
Okay.
Exactly.
Interesting. Thank you. That's quite an exciting one. I never knew that. So Eben, thank you so much for joining us. Could you maybe I know you were into cross-border transaction. I'm sorry for not allowing you guys to introduce yourself. I think maybe just give us a brief about you so people can understand your background and from what perspective you're speaking to the theme of the conversation.
Okay, so I run a B2B cross-border payments company, and we leverage stable currencies to be able to move money across border. So back to the conversation we're having about stable currencies, we use tokenized money, and in this case, we use the tokenized dollar to help move money between countries that we operate in and helping businesses make supplier payments.
Okay, so I'm just going to stay with that, you moving money. How are these new payment tools changing the way Africans send and receive money?
I think recently, let me give an example. Recently, there was Trump in the face of new issuances every week, decided to tap or venture into the remittance space by saying that it's going to tax remittance companies that are moving money out of the US. Very quickly, the community said, okay, if you do that, you tax people moving out money, they'll all move to buying stable currency and moving out. And prior to this point, that is what first movers have been doing. So remittances, as we know today, move on the fiat rails. So someone goes to a remittance app, sends dollar to their family member in another country, whether being it to Africa or the Southeastern Asian market or India, for example. Those are the markets that remittances volumes go to. Now, most of the remittance companies or most of the people facilitating the remittance flows are shifting from the fiat rails because it's much more costly, it's slower because now they have to transfer the underlying structure is you go to say your whatever remittance company app, you deposit your money, for the recipient to receive the money, there has to be an account that has been pre-funded in the local currency already. So it's not the money that the person is sending that is being debited or credited to the customer. So they need to be pre-funded. Now, the pre-funding means that the company has to pre-fund in a position with a payments company at the other side of the transaction. Now, the dollars they've received from you, they have to go through a process of settlement. That takes time. Before then, they have to also wire that money to their counterparty, which also takes time.
This is all that happens in the movement of...
in the background.
Wow.
So which means that most of these remittance companies need a lot of liquidity to operate. Now, stable currency makes it much more faster because it's on chain and movement is faster. So now settlement moves from days, waiting for wires to go through, to minutes.
Interesting. How can these serve the underserved?
Okay. Well, thank you. So I think there are different layers to this. First of all, as Ebenezer mentioned, if you look at the traditional settlement framework, particularly even the corresponding banking system, which surprisingly has, I don't know how long people realize, it's been around for about 1,000 years. This thing was it was created by the Templars Knights. Right? So that's how far back it goes.
Wow.
And to the extent that that has been bolted on for years, when you come to markets like Africa, how do we really benefit from low cost, fast and affordable transactions? And stable, I think blockchain settlement more broadly appears to provide a certain promise of that. So whether it's stable coins or any other assets that will be used on chain, it allows you to be able to settle transactions. There are some networks that can settle up to 50,000 transactions for under $10, for instance. And you can the transactions are settled with finality in under a few minutes, and in some cases, networks with very low transactions, probably in less than a minute. But even more interestingly, if you compare even something as basic as payments using stable coins and as domestically, and payments using any other rails, even within, let's say, I don't want to mention the international card schemes, but even within their own ecosystem, the cost, you're talking about anywhere between 2 to 4% across the value chain.
That's right.
So clearly there's a compelling use case for settling transactions on chain, and the fact that stable coins have been an evolution of traditional cryptocurrencies that are unbacked, and therefore it gives a good measure of stability. It has presented that opportunity for the emerging markets, particularly the global south. But I should also caution, though, that there's also a flip side to that, right? And for me as a policymaker, we have to look at matters at a more holistic level.
Yeah.
So while we're solving this problem, just as every innovation, we have a challenge of being able to now not just regulate it, which is just one part of it. You also have to look within your jurisdiction how you accommodate it in your framework, your economic framework.
Yeah.
The reason being, here's an unregulated channel that could very easily increase the amount of money supply in your
economy. Yeah.
And if you're not careful, the inflationary impact of that could entirely dislocate. Exactly, it could dislocate your monetary policy efforts, and before you realize, your currency is going out of whack. Interest rates.
I think there was an issue like this some 3 years or 4 years ago
in a certain country.
Yeah.
And that's a cautionary tale for all of us. But that is why I highlighted the need for regulators and policymakers to work with innovators and the communities. And appreciate the fact that each party has an interest. Each party has a legitimate view and goal and mandate to fulfill. Because at the end of the day, and the example you referenced without mentioning the country, at the end of the day, you had innovators who are taking great ideas, raise funds on the international market in millions of dollars, and now their revenues domestically are in local currency.
Yeah.
And by the time they were even growing 30-40%, the real value of their revenue meant nothing in the face of the debt that was ahead.
Yeah, they're incurred. Yeah.
Some of them folded, some of them went out of business, great ideas, great companies. They never were able to see true commercial success long term. So this is just a cautionary tale for us to know that there is no success and there is no long-term future in being a cowboy about these things. That being responsible as innovators, especially in the face of a willing and cooperative regulator or policymakers, because I think this goes beyond central banks alone, take advantage of it, bring them to the table. In this country, there's enough evidence of such collaboration yielding true lasting success. And the mobile money industry, from which I came now over a decade and a half ago, has that example to demonstrate to young innovators that it is actually possible to engage. It's painful because it's a bit of a slower process, so it is painful. But you know what? Ultimately, it gives you the opportunity to extend your long-term prospects of your business. Stablecoins are amazing, generally, and I hope at an African level as well, we can begin to see how we can use some variation of tokenization to settle amongst ourselves in a way that we don't have to struggle to pay each other and we're just one people on one continent.
That is bringing my mind to AFTAC. Is it PAPS or Pan-African Payment System and the likes and its use case? But also then I'm also very curious about how the average African can be onboarded to using stablecoins, because then we look at the risk factor and capacity building, just understanding how the market works or how this new technology works. Is there something that what are your thoughts on what could be done to help ensure that Africans are better onboarded, right? Because again, that is what can help.
No, you're right. I mean, one of the key things that you don't want is people hear about something and then suddenly you have a herd mentality going towards it. The consequence of that could be a significant financial stability risk that would eventually impact everyone negatively. Onboarding is and I like this comment that I think it was Vitalik Buterin who said this at 2019, I don't know, one of the Singapore Fintech festivals. He made a point about there being a need for regulation of some of these things like onboarding. And Vitalik Buterin, for the audience, is the founder of Ethereum.
Yeah.
And I had that follow-up discussion with him in person as well while he was out in Ghana. The recognition of even a creator of something as powerful as Ethereum saying, whether you're going to use sticks or stones to operate it, you're going to still need some level of a framework to safeguard the market so that consumers being onboarded, one, can provide the right level of information so you don't wind up bringing in suspicious characters and those with ill intent into the ecosystem. But on the other hand as well, you can use a clean consumer base. You can bring in a clean consumer base who are properly KYC, there's proper due diligence done on them to be able to partake in this ecosystem in a way that would be more beneficial to them. Ultimately, the goal of financial inclusion is a healthier, frankly, now I look at it more as economic inclusion, is a healthier access and use of financial services to enhance the quality of your life. And so proper onboarding rules, proper KY, with the key elements, KYC, proper rules around AML, CFT, proper consumer protection rules as well, right? So people don't lose their money and have no recourse at all. I mean, those are the things that deplete trust, and before I realize the whole
people losing their money, the FTX effect.
Absolutely. So I think the onboarding requirements have to preserve the legitimate, the time-tested goal of the current onboarding framework. This is not to say everything has to be the traditional way. I mean, we've seen things like zero knowledge proof, right? And this technology is quite powerful in its ability to be able to validate someone's claims without necessarily disclosing the information or the content of whatever the asset is. And things like that are important to be able to protect privacy as the emerging Web3 and DeFi sector hopes to be able to afford consumers without compromising our ability to make sure that whoever is transacting, there's actually a legitimate person behind it who should and is able to transact within a financial sector and is not going to cause harm to the broader ecosystem of individuals, businesses, service providers, and regulators.
That's right. Eben, let me comment quickly on that. Onboarding. Then I'm going to zoom directly to you, and you probably speak about the role of regulators and private sector actors like yours collaborating together to build good digital trust infrastructure to help the entire digital asset ecosystem.
Yeah, so I think I just don't want to speak about onboarding just about in the blockchain crypto space. I think it goes way beyond that. The reason is when we were starting, we decided to focus on businesses because we felt businesses who understand some of these things, it's easy to control business narrative than retail market narrative. But increasingly, we realized that you ask certain businesses for certain documentation as a way of onboarding, and they don't understand why they have to provide those information.
Because you have to provide the regulator with this information?
Not just because of regulator, it's also it's part of KYB process to know what the transaction is. So let's say you ask someone for an invoice and it's like, okay, I don't have an invoice, but why are you paying the person? So I think we need to go back and even start training people on financial market things. So like it should be part of our educational purpose.
So more capacity building needed there.
Yes, because it's not, if you take crypto, blockchain, it's just one part of financial ecosystem. If people have the foundational model, they understand why their bank is asking for an ID. Then once you go to a more complicated platform to trade, you understand why they're asking for the ID. It's not because of, for example, you ask a business to provide bank statements as a way of showing source of funds. And they're like, you want to go and look at my money. Like, I don't care about looking at your money. I want to establish that the money is from a genuine source. So people feeling like, I don't know whether it's also a cultural thing, but we need to train people.
It highlights the need for education. And that's one of the things that are lacking in our society in terms of where does education start from for the average African around these policies, right?
Yeah, I mean, I think first of all, the education matter. And Koshi, one of a governor's special assistant, just published 4 books on financial literacy. And I told him, my friend, this thing, there's a bigger effort required, and you need to start. So we're going to start, because the truth is, I've been I've been become painfully aware of how little financial literacy we have in this country. I think Patrick Mfonko have been doing some work around that over the years.
Yeah.
But Richmond has been doing some work over the years, and I follow him a lot on that. But the truth is, people are not financially literate. I used to teach. I'll give you an example. In some time in my career, about 2 decades ago,
You keep saying decades and decades. I mean, how old are you? You look very young.
much older than I am. We had tried to solve a similar problem. It was a problem of housing access. And we realized it was as a result of lack of access to financial, funding to be able to access housing. So then we realized, you work your way back, people didn't have the right level of financial literacy to have the right financial profile to access all the enormous benefits that we're putting in place. And this is in a different jurisdiction. My regulator, and here are all these amazing benefits. They can't take advantage of it. So you had to now begin training people from a financial literacy standpoint, very basic things.
Wow.
And it turns out, from an inclusion standpoint, you can never succeed with inclusion without addressing the financial literacy.
Yeah.
And to the point that he's even making about onboarding, I'm not surprised. And I don't deal directly with
the users.
individuals. But one thing that I've noticed, so there was a project we did called the Ghana Integrated Finance Ecosystem.
Yeah.
A preceding project was something called Universal Trusted Credential. Our idea was to be able to create a tokenized version of a small MSME's identity, right? Their registration information, all those details. And it was an Ethereum standard. We used the standard ERC20 we used actually 720 for that. And the truth is, just tokenizing that so that they can actually use it on chain makes a big difference when they want to be able to participate
and transact businesses,
in the global trade, right? But then we realized that was not sufficient. There was a need for us to take a second step forward to actually train them on various things, bookkeeping and basic accounting and the rest. And so at the time, Development Bank was funding that support and that process. So when you train them, the certificates you give them are also tokenized and it's added to their Universal Trusted Credential.
Okay.
So that if they even wanted to access trade financing elsewhere, that their token spoke to, and that token you could find, or at least if you access that token or they make it available to you, you can know whether they are legally registered, their tax compliance status looks like, all these key elements, and the training and capacity building they've had with these tokenized certificates as well. So that was an attempt to try to address some of these problems so that they can access financing and the rest. It all comes down to that education. And frankly, just like Koshi did, he started with books for kids. I think we have to start
important. We have to start from the schools.
And
I agree 100%.
the adults.
It's also always difficult to influence these with the Ministry of Education, especially in most African countries.
Yeah,
it's not part of the curriculum. We don't teach financial literacy in schools.
It's not, and I think
they teach math. So
they teach math, but you see, that's the thing, right? What I found to be even more appalling is financial literacy is even as, frankly, just about as poor, even among not just educated people, but among financial sector employees.
You're kidding me?
But ask yourself, when there was a last scam, right? Ben's Gold.
Yeah.
Does anyone not know
that is very true?
Guys who were from the sector, and they were very convinced it was legitimate. So financial literacy is broad, right? Financial literacy is broad, and I think being able to balance a checkbook is only one part of it. Is being able to understand how to manage your credit properly, there are several elements of it, and I think that education, various levels of individuals and their educational levels may require a different level of financial literacy. So I think
this is a conversation we need to explore further from here, because we have to dig deeper into it. But before I let you go, just a quick question now. Regulator and of course you're a builder, right? How can both parties team up to build better payment rails without rethinking the users?
So I think it's just for the builders, just demoing what we are building to the regulators, and the regulators giving us feedback as to what is permissible and what's not permissible because the thing is, if you leave builders build the way we want, and if you leave regulators who overly regulate the space, and so there's striking the balance between the two is what we need. And I think currently the Bank of Ghana is pushing more of striking the balance and doing that. I've had the privilege of engaging with them on several of these things where they are working on the new VASP licensing framework and engaging the community on that. So
what is a VASP licensing framework? I mean, our users might not even...
So that's virtual asset.
Exactly what you're speaking about.
Virtual asset service provider license framework.
Yeah.
Awesome, thank you. Yeah.
No, just wanted to say, as you mentioned, we have a very dedicated team that is working over time to really be able to help the community. Pearl, Tahiru, Pearl is leading the team with Tahiru, Kujo, Emmanuel, a lot of them.
I think I've met Tahiru. I think one of the collaborated with MTech. Yes.
Yeah, and they're working over time, and particularly in an open-minded fashion as well, with the actual practitioners in the space.
Yes.
We know what we are trying to preserve. You know what you're trying to achieve, and somewhere we'll find a balance. It might not always be to your comfort, or it has to be to our comfort because we have a mandate.
I mean, you have a mandate of protecting.
Yeah. Sometimes. Let's start from protecting small and see how we take a risk within sandbox environment. But I think largely we've learned along the way and we're making progress.
From your standpoint, the collaboration is great with the builders.
I think the collaboration has been good. Here's why: because we've gone from a full don't touch this to and that's what matters, right? What matters is progress.
Yes.
And for as long as we're seeing progress, as long as we're at this point, as long as a whole governor can stand on a stage and make a commitment to regulate or at least put the right framework around the digital assets and virtual asset space, then we've made progress, even without the law yet coming into passage. So I think we just have to keep at it and learn from each other and build the future we want.
The Bank of Ghana recently, maybe in the last year, had this fintech passporting thing with Rwanda, right? How are we collaborating with other African countries so we don't have different legal framework or, in terms of now regulation?
Okay.
And so that builders like himself can expand into those markets and still transact and do business.
There's something interesting about Africa. If you catch individual regulators and citizens now, we all agree on the same things. I do not know what it is.
What is stopping you?
I don't know what it is. Look, sometimes we've had a conversation about this. Rwanda works closely with Ghana.
Yeah.
We have a very good working relationship at the leadership level and at the operational level as well. In Singapore, people used to ask the same question: how come you're always doing things with Singapore? How come there's never an African country? But
what's happening with Nigeria? What's happening with Sierra Leone, Liberia?
To be fair, at the Africa Fintech, the Africa Fintech Association's online session that they did, I think about 2 months ago, Nigeria expressed an interest in also coming on board. What has happened though is I think often you need, I don't call it a coalition or the willing, but a group of pathfinders who go out there, learn, bruise our noses and our shins a bit.
People with the will.
Well, with the will to just test out things.
The question for me is, can't these things be done on the AU level or the organization body?
Because you talk about
those bodies
are supposed to be together too.
We're not finance, we're not foreign affairs ministries and the rest. So we're trying to control, especially for me as a regulator of the fintech space, trying to control what is well within my realm to be able to control. I know my counterpart. I know who's willing and ready. We share, and believe it or not, for everything we're doing, we'll be sharing with all the other regulators as well. So at some point, when they have
that cohesion.
Come on board. That announcement is not the first time. My first attempt at license passporting was 2020. I went all the way to the end with a full framework written in collaboration with West African central banks. It never actually came out.
Wow.
So this is the reality.
I think it's good that in 2024, it was 2024 this year.
Yeah, no, we actually announced it this year.
This year, it was announced this year, but I know that a lot of work was done in making sure that
has been done in it. So I think at some point, it's also building, it's creating a new momentum.
But timelines, duration, 5 years, post 2020.
So
that is crazy.
That was on the West Africa level.
How fast then can we build as Africans?
That's why we went to Rwanda to start from there. At least once we do it, it's no longer theoretical. Here it is, it's working. So
you left the whole entire region of West Africa and went all the way to East Africa?
Yeah. Yeah, we have to be pragmatic. There's still Africa. Right?
Well, yes.
Yeah.
That is true.
So, look, we've just offered ourselves as a test case.
Yeah.
And we hope we can share our learnings, the good, the bad, the ugly, and we can bring everyone else on board in time.
Okay.
All right.
Let's leave with the last words. How can we build corridors to help remittances?
I think it's just improving access and making sure the players are all playing by the book. Because bad actors.
Innovators actually play by the book.
Yes and no. Again, in every industry, there's going to be bad actors. I always say this, not really taking things for what it is and not the industry the person is playing in. For example, if I come here and say, I'm doing cocoa trading, and if you give me money, I'll double it every month for you. And at the end of the day, it ends up to be a Ponzi scheme.
Yeah.
It's not the cocoa trading. I was doing a Ponzi.
Yeah.
So let's treating Ponzi as Ponzi and going after people. We have clear example of that. FTX happened to be using customer funds for something they're not supposed to do, and they were penalized for it. So we're not making sure that the bad actors don't spoil the soup for everybody, and also making sure that the good actors are also praised, and making sure people see that the industry is not a bad thing. It's just there are bad actors in the industry.
Thank you very much. Last words?
No, thank you. It's a pleasure engaging the ecosystem. Let's continue to work together. We can make things happen. Thank you.
This has been Conversation by the Africa Discourse channel at the Digital Asset Summit Africa, and joining me is the head of Fintech at Bank of Ghana, Mr. Kwame Oppong, and the CEO of Africa. Thank you very much. We keep on bringing you educational content that inspires, educates, and help you make bold and resilient moves in the African market. Thank you very much. My name remains Richard Joseph. I'll be right back.